Trading a breakout strategy usually means staring at the chart, waiting for that one level to break, and typically, the moment you look away, that's when the price moves. You can set a price alert, but when the alert gets triggered, you still have to go back to the chart and place the order manually. And in options, you track the underlying, but you trade in a specific strike, which could lead to further delay in entry. So instead of reacting manually after the breakout, what if the order could be placed in your specific strike price automatically? That's exactly where alert triggered orders come in. They remove the delay between the alert in the underlying and the order entry into your specific symbol. In this video, we'll build a simple alert triggered order workflow in Automate. The moment the price hits the breakout level, the order is placed automatically with the stop loss and target already defined. We'll do it in 4 quick steps. First, set the trigger in the underlying. Second, define the action for the order placement in a specific strike price. Third, define stop loss and target. Fourth, add a time-based exit as a backup. Let's begin by opening Automate and creating a new workflow. Set the schedule to 9 AM so everything is active before the market opens. We'll start with the trigger. Go to Triggers and add a Price Breakout block. Choose the symbol, let's say Nifty 50. Enter the exact breakout level you're tracking on the chart. This is the price where you want the action to happen. Next, set the direction. If you're looking for an upside move, choose greater than. And if you're planning for a downside move, choose less than. Once this is set, you don't have to stare at the chart anymore. The moment the price crosses that level, the workflow moves to that action automatically. Now that the trigger is ready, let's add the action. Select Place Order. We'll use Nifty 50 and place a buy order in call options. For this demo, we'll set the product type to intraday. For strike selection, choose ATM. This way, no matter where Nifty is trading, the nearest strike is automatically picked at the time of execution. Set your quantity. For this example, we'll keep it simple with just one lot. Before we go any further, let's define the risk. Inside the same order block, set a stop loss of 25% and a target of 50%. And make sure the square off leg is enabled. This ensures that the position exits automatically when either the stop loss or the target is hit. At this point, your entry and risks are fully defined, so the workflow is complete. However, we'll add one final safety net. Sometimes, price hits neither the target nor the stop loss and just goes sideways. So if you don't want to carry the position to the close, we'll add a wait block and set it to 3 PM to ensure that if the position is still open, it gets closed safely before the market closes. After that, add a stop automation with square off enabled. Once all your blocks are connected, click Start, give the workflow a name, and you're done. From here on, Automate handles everything. It waits for the breakout, places the order instantly when the price hits your level, manages your stop loss and target, and exits before the close if needed. You can track all of this from the dashboard, including when the trigger fired and when the order was placed. This is just one of the examples of how you can use Automate, and not a recommendation. Try Automate now and let us know what you want to see next.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.